If you've been hearing a lot about real estate syndications lately and feeling like it's a bit of a complex term, don't worry. By the end of this video, you'll have a clear understanding of what a real estate syndication is and why it might be the perfect strategy for your real estate investment journey. If you're new here, I'm Tim Mai, a real estate fund manager and entrepreneur based in Houston, Texas, who discovered a way out of the rat race through passive income. I've got a special gift for you, how to pay zero taxes investing in real estate guide below this video, so make sure to download it. What exactly is a real estate syndication? Let's break it down. Imagine this scenario. You've got $100,000 to invest, your friend has another $100,000, and another friend has $100,000 too. Individually, none of you can buy a big real estate property, right? But when you pool your money together, you now have enough to invest in a much larger property like a mobile home park, apartment building, or even an RV park. That's essentially what a real estate syndication is. A couple of years ago, I did this with a few friends of mine. We both put our money together to buy an apartment complex in Fort Worth, Texas. It's a perfect example of how syndications work. We combined our resources to invest in something that we couldn't have done alone. Why should you consider syndication? Invest in larger properties. Syndications allow you to invest in bigger properties that are otherwise out of your reach. As a solo investor, a $2 million property might be a dream, but with syndication, you're able to pool your funds and invest in these larger opportunities. Potential for bigger returns. Now, I'll be honest, one of the biggest reasons I left investing in index funds is because I discovered real estate syndications offer much higher returns. While the stock market is unpredictable, real estate can provide consistent cash flow, tax benefits, and ultimately better returns on your investments. It's a passive investment. This is the best part, especially for busy professionals. As a passive investor, you don't have to deal with managing the property, fixing issues, or handling tenants. You simply invest your money and watch it grow. It's hands-off, and that's why it's such a popular strategy among busy professionals like doctors, attorneys, or specialists in any field. How does a real estate syndication work? There are two main parties involved in a syndication: the general partner, GP, and the limited partners, LP. General partner, GP, this is also known as the syndicator. The GP is the person or team that identifies, acquires, and manages the property. They handle everything from day-to-day operations to executing any value-add strategies that can increase the property's value over time. Limited partners, LP. These are the passive investors. You and me, we provide the capital to fund the property. As limited partners, we don't get involved in the day-to-day management, but we benefit from the returns once the property starts generating income. What's the process? Let's walk through an example to make this clearer. Let's say you and a group of investors are interested in purchasing a $3 million mobile home park. The GP determines they need to raise $1 million from passive investors like you to cover the equity part of the deal. The GP will present this opportunity to potential investors, like the passive investor circle, and invite them to contribute to that $1 million pool. You don't have to be a real estate expert to participate. All you need is capital. Once you invest, you're in. The GP takes care of everything else. They make sure the property is well managed, handle repairs, tenants, and ultimately increase the value of the property. Your role as an investor is simple. Sit back, relax, and watch your investment grow. Minimum investment requirements. Typically, the minimum investment for these deals is around $50,000 to $100,000. To ensure the investors can handle the risks, most syndications require that investors be accredited, meaning they make $200,000 plus a year or have a net worth of $1 million or more. Now, you might be wondering, why do I need to be accredited to invest? Well, these rules are designed to protect investors. If you only make $80,000 a year, investing $100,000 in a deal that goes south could be financially devastating. But if you have a higher income or a larger net worth, you can take on more risk because you're more likely to recover if things go wrong. What are the benefits of syndication? Let's talk about the benefits you get when you invest in syndications. Regular cash flow. Once the property is up and running, investors typically receive quarterly payouts. These are the profits generated from rents, leases, or other income streams. Tax benefits. Real estate comes with substantial tax advantages. For example, you can benefit from depreciation, which allows you to reduce your taxable income. This is a huge advantage over other investments like stocks. Higher returns. Investing in real estate through syndications generally provides a higher rate of return than investing in the stock market. Many real estate syndications offer returns of 8% to 12% annually, plus the potential for a bigger payout when the property is sold. A hands-off investment. This is what makes syndications perfect for busy professionals. You don't have to worry about the day-to-day management of the property. The GP handles everything while you sit back and enjoy the returns. The investment period. The typical investment period for a real estate syndication is anywhere from 3 to 7 years, with 5 years being the average. During this time, you'll receive regular payouts, and when the property is sold, you'll receive your initial investment back, plus your share of the profits. Closing thoughts. Real estate syndications are a great way to invest in properties that are typically out of your reach while benefiting from higher returns, passive income, and significant tax benefits. Plus, it's a hands-off investment that's ideal for busy professionals who want to invest in real estate without all the headaches of managing it. But the most important part of this process is finding a trustworthy, experienced GP or sponsor. The success of your investment depends on their ability to manage the property effectively. If you're an accredited investor and you want to learn more about the syndications we personally invest in, make sure to join our free Passive Investor Circle below. Thanks for watching, and I look forward to helping you create more passive income and wealth with real estate.